Are we witnessing the dawn of a new economic era ahead of the 2024 election?
Today, you're about to hear from financial luminaries like Brien Lundin and Danielle DiMartino Booth on crucial shifts we need to address.
And the great part? We're compressing hours of nuanced analysis into sharp, focused insights you can grasp quickly.
That's right. Let's find out how Brien Lundin predicts U.S. debt might push gold to astonishing levels.
Welcome to Financial Insights in Minutes, where we dissect the day's best financial and economic insights for your convenience.
Stick with us as we explore the critical question: are we headed for an economic reckoning, as Danielle DiMartino Booth suggests?
But first, hear from Steve Hanke, who will shed light on the current financial landscape and its outlook. Today, we're diving deep into the controversial topic of tariffs as proposed by Donald Trump and whether they might lead us to an economic boom or a crushing bust.
It's certainly a hot topic, especially given the historical context and the strong opinions surrounding it.
What's the core thesis of today's discussion?
The central claim is that tariffs, while protecting companies, could backfire, leading to inflation or even disinflation without the anticipated benefits.
Interesting. So what's the primary argument in favor of these tariffs?
Supporters claim they protect domestic jobs and industries, especially manufacturing, by making imported goods more expensive.
Let's break down the arguments for implementing tariffs. What are the main points?
The primary rationale is that tariffs increase the cost of foreign goods, encouraging consumers to choose domestic products. It's about protecting jobs here in the U.S.
And what about the counter-arguments against tariffs?
Critics argue that while they might protect jobs, tariffs usually lead to higher prices and reduced quality. If consumers have no choice but to pay more, it could impact their standard of living.
What can history teach us about tariffs?
Historically, tariffs were used during America's industrial rise, but conditions are different now. More bureaucracy and less flexibility hinder growth.
What predictions does Gammon make about the economic impact of these tariffs?
He forecasts that if implemented, we could see rising prices and a decline in living standards, pointing to reduced quality and availability of goods.
What can we expect regarding consumer prices?
It's likely we'll see price hikes at grocery stores and general retailers as tariffs increase import costs.
Any long-term economic predictions?
Yes, continual protectionism might hinder overall growth, leading to increased central planning and reduced market efficiencies.
So what should our key takeaway be from all this discussion?
Tariffs are a double-edged sword. They might protect certain industries, but come at the cost of higher prices and lower quality for consumers.
Today's analysis dives into Steve Hanke's insights on what drove the recent political shift in America. What prompted this revolt against the elites?
Hanke suggests it's a reaction to growing economic disparities and dissatisfaction with government management, aggravated by the pandemic.
So, what's the central theme of Hanke's argument?
His core thesis is that Americans feel disenfranchised due to the growing wealth gap, prompting a significant political backlash.
Interesting. Is there a specific data point that illustrates this sentiment?
Absolutely. Hanke shares that the wealth of the top 1% surged to over 21% of GDP, while lower income groups saw stagnation.
What can you tell us about current economic policies?
Hanke points out that the federal deficit is alarmingly high, exceeding 6% of GDP, raising concerns about sustainability.
What's the latest on inflation rates?
Inflation has eased to 2.1%. Hanke argues this reflects a contraction in the money supply initiated by the Fed.
How did the Trump election tie into these shifts?
Voter dissatisfaction with socioeconomic conditions led to Trump's victory, as Hanke notes a shift in public sentiment.
What does Hanke predict for future monetary policies?
He anticipates the Fed will maintain a cautious approach, potentially stabilizing interest rates while monitoring inflation closely.
Does Hanke foresee any economic downturns?
Indeed, he warns that a continued contraction in money supply could point to an imminent recession.
In conclusion, what should viewers take away from Hanke's insights?
Hanke emphasizes the need for urgent fiscal reforms and cautions against the political elite's actions, urging viewers to stay informed.
Staying informed is key, especially during such pivotal shifts.
Definitely. Understanding these dynamics will be crucial as we navigate the upcoming economic landscape.
Today, we're unraveling the drama around Germany's collapsed coalition government, What a time to be diving deep into economic headlines.
Indeed, who could have predicted that ignoring economic reality would lead to political catastrophe?
What's the core thesis behind this political shakeup across Germany?
It illustrates how political accountability is front and center when economic realities can no longer be ignored.
Right. And it seems like the markets are signaling a lot more than just voter frustration. Let's break down what this negative swap spread in Germany means.
It's not just a technicality, it's a glaring sign of economic distress.
Voter anger seems to be bubbling to the surface. Why is this happening?
Because voters are tired of being misled about their economic situation, pushing them to vote out those in power.
What about the broader global context? How does Germany fit in?
Germany is just one piece of a larger puzzle. Global economic signals are pointing to a downturn everywhere.
With the government in turmoil, what about future elections?
Constituents might see new candidates promising change. Whether that change will work is another story.
To wrap things up, what should viewers take away from Germany's recent turbulence?
Accountability in politics is crucial, especially when the economy isn't recovering as promised.
Absolutely. And it's clear that discontent is spreading quickly across borders. Today, we unpack Brien Lundin's compelling insights on how U.S. debt could reshape the economic landscape and gold prices.
Interesting setup. Brien's comments about the potential for a debt crisis are worth examining.
What does Brien see as the crux of the matter concerning U.S. debt?
He indicates that servicing existing debt has become increasingly unmanageable, necessitating aggressive rate cuts.
That's concerning. What are the implications of such drastic measures?
If rates drop historically, gold prices can skyrocket, potentially reaching $6,000 to $8,000.
The Fed has recently cut interest rates. What was their rationale?
They acknowledged a weaker labor market, hinting at a more cautious approach moving forward.
Brien warns of an impending debt crisis. What key figures support this claim?
With national debt on the brink of $36 trillion, the burden of servicing this debt is unsustainable.
What predictions does Brien offer regarding future gold prices?
He cites historical trends suggesting gold could hit between $6,000 and $8,000 as market conditions worsen.
How does Brien justify his bullish gold prediction?
He references historical performance in similar economic climates, expecting a swift rise.
What does Brien foresee about the Fed's next moves in terms of policy?
He warns the Fed will likely need to pursue aggressive cuts to stimulate the economy.
What final thoughts should viewers take away from Brien's insights?
Investors should prepare for upcoming challenges, but also remain open to strategic opportunities, especially in gold.
In this episode, Danielle DiMartino Booth shares her insights on the current economic landscape. Make sure you're taking notes.
It's crucial to discuss what's really happening behind the scenes as we navigate potential economic turmoil.
Danielle, what's your view on the current state of the economy?
I genuinely believe we are in a recession. Data points indicate systemic issues in job creation and revisions confirming a downward trend.
That's alarming. What data led you to this conclusion?
Look at the revisions for private sector job creation over the past 2 years. It's troubling.
What's really concerning about the job numbers?
Most job growth is in government roles, which raises issues about sustainability.
How do you assess the Federal Reserve's recent moves?
They've maintained a disciplined stance, but the lag effects of their policies might create turmoil.
With the housing market shifting, what should potential buyers expect?
Increased inventory could lead to lower prices, which is good news for first-time homebuyers.
What do you foresee in terms of corporate bankruptcy risks?
I'm worried about over-leveraged companies. It seems we're on the brink of a significant increase in bankruptcies.
Can AI truly transform public education?
Absolutely. It has the potential to bring quality education to underfunded schools.
What's the key takeaway for our audience today?
Stay alert to these economic changes and consider how they may influence your financial decisions.
And look to harness new opportunities, especially with technology shaping our future. This week, we're dissecting the market's reaction to the U.S. elections and what it means for investors moving forward.
The results have sparked significant shifts. Who could have predicted such decisive outcomes?
So what does the future hold following this political shift?
It's all about understanding the broader implications. There's a clear appetite for growth, backed by new policies.
Polling appeared wildly inaccurate. What's led to this failure?
Many traditional methods seem out of touch with current public sentiment. This could reshape how news is consumed.
Post-election, we saw a strong market response. Why do you think the uptick was so dramatic?
Investor confidence skyrocketed, fueled by expectations of pro-growth policies.
What should investors be focusing on in this new landscape?
Renewed interests in decentralized technologies and innovative sectors should dominate portfolios.
What's the projection for Bitcoin following the election?
With a pro-crypto agenda now likely, we could see a significant uptick in adoption and regulatory clarity.
What's the biggest takeaway for investors based on our discussion?
Stay alert for emerging opportunities in tech and crypto as regulations evolve.
Wow, what a dynamic discussion we had today surrounding the economic landscape leading into 2024.
Absolutely. Brien's perspective on gold prices soared with the idea of a debt tsunami was eye-opening.
And Danielle's insights about underlying job market weaknesses paint a more worrying picture, don't you think?
Indeed, and Steve's optimistic take amid these turbulent shifts certainly adds to the complexity. But it left me wondering, are we seeing a potential policy pivot?
Definitely. And Gammon's remarks on tariffs remind us that every economic move comes with its own set of risks.
A nuanced landscape for sure. We hope you found value in today's analysis.
If you did, make sure to like and subscribe. Your support helps us continue bringing you these crucial financial insights.
And don't forget to check out our other videos for even more in-depth discussions and strategies that empower you to navigate these economic waters.
Thanks for watching, and see you next time.